Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where we recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 27th of October, 2021. Alright everyone, let's get into it. So, the Altair Beacon chain upgrade successfully completed about an hour ago at time of recording, probably less than that actually. This is something that I've been talking about on the Refuel for the last few months. Hopefully you've all updated your nodes if you are a solo staker. If you haven't yet, be sure to do so, of course. But the update the upgrade I should say, seems to have gone off without a hitch. So if we go over to the kind of like Beacon chain website here, which is a website that I use to track all kind of like different metrics around ETH2, you can see here that it's going nicely. The Beacon chain is chugging along as it normally should be. It's justifying, it's finalizing. There is, a 250,000 validators still actively validating. I think 95% participation rate. Yeah, about 95%, creeping up to 96%. So there's probably, I think, 4 or 5% of worth of validators right now that either didn't upgrade or offline for another reason. So we should expect this to kind of creep up. You can see here actually when it activated, it went from 99.65% participation to 95%. So we lost about 4.6% of validators, which is a pretty good turnout because it's funny, like people were kind of saying that there was only 70% that had updated, but it turns out there was a lot more than that. So 95% had updated, which is, I mean, that's quite amazing, right? I mean, 95% of all kind of like validators on the network updated in time and are paying attention and are actually across all this sort of stuff. So really, really cool to see that. As I said, that's going to keep trending up over time. I expect within the next couple of days to get right back up to that 99% participation rate, which is really cool. And I guess like maybe it's self-explanatory, but just to give a bit of explanation here, the participation rate refers to the amount of validators actually participating in validating the network. I mean, obviously that's self-explanatory, but just like making sure that you guys I kind of like know what I mean by that. But yeah, really, really cool to see this. Now, I've gone through what Altair brings to the network before, so I'm not going to go over that now. But I think what's really awesome is the fact that the Altair fork is going to enable light clients. So light clients, I'm not going to go through what they are now on the Refuel because, to be honest, I don't totally understand them enough to kind of give an explain like I'm five explanation of it. But from a high level, what light clients want to enable is for people to kind of like be able to run kind of like I guess a node for whether that be kind of like Ethereum on the consensus layer or on the execution layer, I should say. They want to be able to run a node on kind of like super, super low powered hardware or hardware where you basically don't have to like validate the whole chain on. So something like a mobile phone or a kind of like a really low powered device. And basically, from my understanding, the way the Light client would work is it essentially allows you to kind of like verify that everything is well and good and kind of like do transactions using that Light client instead of having to use something like Infura, for example. Now, I need to do more research there. Of course, I should have already done this. This has been on my to-do list for a while now. But I mean, I suggest all of you kind of like do a bit of research into light clients as well. It's going to be more important going on. And as kind of like Lion says here, as part of Altair, it enables light clients, and there's a lot of work going into this as well. A lot of work going on around stateless Ethereum too, which is kind of like a related topic, which I've talked about before. So yeah, really, really exciting. And of course, after Altair, as I've been saying for months now, all eyes and all kind of efforts are on the merge. So, the funny thing is that there is actually another technical network upgrade happening, which I'm going to talk about in a sec. Actually, I should move maybe Tim's thread to here. There is another kind of like network upgrade for ETH1 just to push back the difficulty bomb, which I'll talk about in a sec. But other than that, the merge is kind of like what everyone's focusing on right now. So very much looking forward to that. I just wanted to kind of like show off this art here. There was a paint party that the kind of like POAP community did, I think with the ETH Staker community as well on their call, where basically people were able to kind of like make this art and draw this art. And you can see, I mean, just looping through the video here, it looks really cool. Bunch of ETH logos around there. A bunch of different kind of like memes and a bunch of different references to Ethereum and apps built on top. So I see the Rocket Pool logo, GM up here, OP, Optimism, Synthetics, all of this really cool stuff. And apparently we should expect an NFT soon, which is really, really cool. So yeah, I just thought I'd kind of like give you guys a look at that. And it says ETH 10K down the bottom as well. I love that. Oh God, it is ETH 100K. Someone changed that. This is kind of like one of those things you can keep staring at and finding little Easter Easter eggs and kind of like references to different things. So that's why I love looking at this sort of stuff. But anyway, as I was just saying, Tim Beiko put out another All Core Devs update today. Now, this All Core Devs update, you should definitely give it a read. It'll be linked in the YouTube description. Is mostly about the merge. So there's actually a lot of technical stuff about the merge in here, which I suggest reading if you're interested in how kind of like the merge is going to work under the hood. But 10% of it, as he says here, is about the difficulty bomb. So as I said, the next network upgrade is actually going to be called Arrow Glacier. This is for the ETH1 network, and this is going to go into effect on December 8th, 2021, or is expected to go into effect on December 8th, 2021. It includes only one EIP, which is EIP 4345, which just simply pushes back the difficulty bomb until June 2022. Now, if the merge isn't ready by June 2022, then we'll have to have another kind of like network upgrade to delay the bomb again. But I think that we should be ready by June 2022. I think that's kind of like the goal, so that we can just push the difficulty bomb back and also kind of like do the merge at the same time. But I highly recommend giving this post a read here from Tim. It gives a lot of great information about the merge, how it works under the hood, kind of like how the merge is actually going to happen. So as I've discussed before, it's actually going to happen based on the difficulty of the ETH1 network, and the Beacon node, I should say, is going to be able to kind of like see that and work on that. And then you've got like a few diagrams here, which I think I've showed on the refill before, explaining these sorts of things. So yeah, definitely go give this a read. But I mean, how exciting, guys. Like, there's so much happening on the ETH kind of like core protocol side. And I just love the fact that we are witnessing, as I've said before, the golden age of Ethereum. The Ethereum network, like core protocol development, has never been this exciting. In terms of like all the years I've been in Ethereum, it may have been more exciting in the really early days, like 2015, 2016, because it was newer. But I don't know. I don't think so. I think the people that I've spoken to who have been around since then are kind of like feeling the same thing I am, where we kind of look at this sort of stuff and we look at everything happening across like both networks, obviously ETH1, the execution layer, and ETH2, the consensus layer. And we look at kind of like all the upgrades going on and all the really cool things happening on either end there. And obviously the merge is like the end goal, and then beyond the merge with sharding and statelessness, and everyone kind of like thinks to themselves, this is so awesome. Like the fact that Ethereum is 6, 7, 8 years old now, and it's still able to kind of like upgrade itself. It's still able to attract so many smart researchers and developers to continuously upgrade the network and make it better, and ensure that we can have like a healthy running network and that gets better functionality over time is really, really cool. So I really enjoy that. But yeah, as I said, definitely recommend giving this post a read from Tim Beiko for more kind of like information about that. So Adobe announced today that Photoshop will be adding a prepare as NFT option soon, and the attribution data will be hosted on IPFS. So I kind of read about this in The Verge today, and this article goes into a bit more details here. There's a few cool things to pick out of this, actually. So Adobe said that NFT marketplaces like OpenSea, Rarible, Known Origin, and SuperRare will be able to integrate with what they're calling content credentials to show Adobe's attribution information. This is really cool. Like, you can imagine an artist basically making something in Photoshop and then immediately kind of like picking the export as NFT option, or basically, what is it? Prepare as NFT option, and being able to get this attribution data, and then being able to feed that into one of these kind of like open marketplaces, because it's on IPFS, it's on an open data standard there, which is really, really cool. I mean, I didn't expect this to come this fast, but it makes a lot of sense. As I mentioned the other day, I feel like there's these platforms or these Web 2 apps are a bit behind right now, but they're definitely catching up in terms of integrating NFTs into their platforms, into their work. I wouldn't be surprised to see one of the big apps like Instagram announce a kind of, I guess, NFT integration sooner rather than later. Because when you think about it, imagine Instagram allowing all of their creators to basically say, tick a box that says, do you want to create an NFT out of this? And then whatever platform they end up using, I hope they end up using something based on Ethereum, whether that be their own kind of roll up, or they use something like Immutable X. But it would be really cool if you basically had this option where you could just immediately mint this NFT, and it was minted as an open standard, one of the open standards on Ethereum, and then you could integrate it with all the open marketplaces. Obviously, Instagram will probably have their own marketplace, but I do hope they embrace kind of like the open nature of Ethereum rather than just like siloing themselves. I mentioned the other day that TikTok is doing their NFTs on Immutable, so maybe Instagram's going to follow suit there because they'll see it and they'll be like, oh, well, TikTok's huge, right? I mean, I think TikTok's bigger than Instagram at this point. So I don't think, web apps like that, or should I say apps like that, are far away. And I also think we're going to keep seeing more and more of this, of like all these different kind of Web 2 services integrating NFT options into their products and services. It just makes so much sense to me. And it's a massive opportunity. I mean, there's a reason why these NFT teams are raising so much money as well. I mean, I've gone through the raises before. So Rare, I think it was like a $600 million raise. And there was a bunch of other NFT platforms just raising a ridiculous amount of money. And this is because people see, or investors see, the opportunity of NFTs. They see how big it can get. They see how big it already is. And we're really only scratched the surface of this. Seriously, NFTs can be embedded into like almost every kind of like portion of kind of like the internet and of everything that's digitally native. Video games, art, collectibles, like not even just that, like NFTs expand to all the Web3 stuff too. Like Mirror already does this with their blogging, where you can basically mint an NFT out of a blog post. Then you can have like music streaming, things like that. The possibilities really are endless, and NFTs are going to definitely change everything. And they're going to be $1 trillion industry, no doubt about it. So I think the sooner we see more of these integrations, the better. But I'm really glad to see that Photoshop has done this. Adobe, I should say, has done this with Photoshop. And I'm sure they'll probably extend this to their other tools as well, as is relevant. And I'm also sure that there's going to be more integrations coming. We saw the other day, Steam basically said, oh, we're kicking NFT or blockchain games off our platform. And then Epic Games came in and said, well, we're going to onboard them. We're going to let you have these kind of like games and NFT stuff and blockchain stuff on our platform. I think Steam will reverse their stance eventually because the opportunity will be too big. The money to be made will be too large. But yeah, I mean, don't be surprised to see more and more of this stuff coming out as time goes on. All right, so I read about this in the Daily Gwei newsletter today, but I was looking at the ultrasound.money website as I normally do, and I looked at the 30-day burn leaderboard because I was just very curious because the SHIB token has been pumping really hard lately. And for those of you who don't know, it's an ERC20 token. A lot of these dog tokens actually live on BSC, but SHIB is on Ethereum as an ERC20. Now, this token has obviously gone up a lot in value over the last few weeks if you've been paying attention to the markets. But what I find really interesting is that it is in the top burn leaderboard, which makes a lot of sense considering like how many trades are going on, because every time like a SHIB token is moved, whether that be for like a simple send from like one wallet to the other, or for an actual kind of decentralized exchange trade, that is going to incur a gas fee, of course, and that is obviously going to burn. There's going to be like 70 or 80% of that gas fee being burned. Now, if you'll notice from this leaderboard, at least from the top part of this leaderboard, the only other tokens here are stablecoins like Tether and USDC, which makes total sense because stablecoins are, besides ETH, I mean, ETH is at the top here, but stablecoins and ETH are the most kind of like liquid tokens on Ethereum, and they're the ones with the most kind of velocity. They move around, like ETH's paired with everything, of course, on like AMMs, stablecoins are as well, and then normal ETH transfers, I mean, it makes a lot of sense too. Like ETH is the reserve currency of Ethereum, everyone uses it for everything, so it makes a ton of sense. But the fact that SHIB has burnt 3,288 ETH in 30 days alone, just that token, speaks to how popular it has been. It speaks to how much activity and trading activity has happened on the network. Now, what I wrote about in the newsletter today was about the fact that pre-1559, this sort of stuff that people consider to be like a joke or a scam or like a meme was very parasitic to Ethereum, because what it would do is it would basically free ride on the Ethereum network. It wouldn't do anything really to add value to the network. It may have kind of like added value in terms of like metrics, in terms of people saying, oh, well, there's more activity on the Ethereum network, but really it didn't give any value back to ETH holders in a direct way. Well, now it does, right? 70 to 80% of that is burned and going to indirectly to ETH holders, because obviously, as more ETH gets burned, we expect the ETH price to trend up over time, which is very positive. And I wrote about this back in June 2020, where I wrote a piece for the Daily Gwei newsletter called "Creating a Symbiotic Relationship," which talked about the fact that now, when 1559 was implemented, which it has been implemented now, every single transaction on the network is going to pay its dues in burnt ETH. It can't free ride anymore. Now, the thing is, I only think that 1559 fixed half of the issue. The other half of the issue is that a lot of this stuff bloats the chain. So there's something called the state in Ethereum, which basically keeps track of things like user state and the state. I mean, the state of the network. Really, I'm not going to dig into the technical details there, but it keeps track of that sort of stuff, and it has to keep track of that forever. Now, there is the stateless Ethereum effort, which basically is trying to make it so that the network doesn't have to keep track of everything forever and keep the active state forever, and basically say, well, if this state hasn't been touched in a long period of time, put it into like a dormant state, and then it can be rewoken in the future if someone wants to access it. But right now, there's a lot of junk on the Ethereum network that's just sitting there that makes no sense. It just makes no sense for it to be sitting there, clogging the network and making it harder to sync a full Ethereum node, because of the fact that it's just useless to people now. Like, you know, for people who were around in 2016, there was the Shanghai DOS attacks, which added a lot of state bloat, and that's still there. Like, when you sync an Ethereum node, you'll notice that when you get to the blocks around the Shanghai DOS attacks, which I think happened in October of 2016, the syncing will actually become slower because it has to process all of these kind of all of this state, which is just dead weight. It really is on the chain at the end of the day. And, you know, people often say, well, I mean, Ethereum is decentralized and permissionless, so really you shouldn't be moralizing about what people can put on the state or on the network and what they can't. And that's not what I'm doing at all. I'm not moralizing about this at all. I'm glad that anyone can do whatever they want on Ethereum. But I think that there is letting people do whatever they want on the network and keeping the network healthy. So the first half of that equation is making sure that value that people are getting out of the Ethereum network flows back to ETH. We've done that with EIP 1559, and kind of like some other ways around that as well. And then the second thing is making sure that if there is something that no one has actually interacted with, if there's some state that no one's interacted with and no one cares about, then let's just put it into a dormant state. Let's not keep it, in the active state forever, because why would we? If no one cares enough about it to actually interact with it, well, then we can safely say that it can go to sleep, it can stay dormant, and then if someone wants to resurrect it sometime in the future, they can present basically, I can't remember the exact term, the term for what it's called. It's not a fraud proof, but I think it's called a witness. They can present a witness to basically say, yes, okay, well, I want to activate this state again, and then they're able to kind of do that, to do whatever they want with it. So from that point of view, it's not like the network is taking a kind of like favoritism to anything. It's basically saying that anything that isn't part of the so it hasn't been like touched or hasn't been interacted with in, say, a year's time, move it to the inactive state and then just continue on. And that makes it much easier to sync a full node. Makes it much easier to do things to do things like light clients and stuff like that, I believe. So yeah, that's what we want from it. But again, I think this definitely needs to be done in a way that doesn't kind of like do favoritism for any types of transactions, because we do want the Ethereum network to be fair for everyone. But at the same time, there has to be a balance. There's always has to be a balance between kind of like making the Ethereum network kind of like fair for everyone to use, but also making it so the network doesn't fall over in the future. So that it keeps chugging along, keeps it to 100% uptime, keeps staying healthy and sustainable over time. And I think that's what we're doing with, what we've done with 1559 and what we will do with stateless Ethereum as well, which in terms of timelines, I wouldn't expect stateless Ethereum to be integrated until after sharding, which is probably 2023, but it's not like that urgent of an upgrade. We can still live with, this sort of stuff for another couple years. It is not a huge kind of like a critical thing, but it is definitely something that we need for the longer term health of the Ethereum network. So I'm glad people are working on that. That's for sure. So the Bankless DAO has submitted a new index, a proposal for a new index product to the index co-op called the GMI, or the Bankless DeFi Growth Index. And I guess the ticker being GMI stands for "Gonna Make It," which is a pretty cool ticker there. But basically, this seems to be like a quote unquote DeFi 2.0 index, which basically has all the tokens that aren't included, or at least a lot of the tokens that aren't included in the DPI, or the DeFi Pulse Index. You can see here some fan favorites like Spell, DYDX, POAP, CVX, RGT, Tribe, Toke, DPX, RBN, MPL, Visor, and FLX. Now, there is a forum post about these that you can go check out here if you want to kind of give your feedback on that. But I think this is cool. I mean, I'm kind of like in two minds about it. I think it's cool because I want to see more index products spun up with the index co-op. But at the same time, index products, I mean, we actually had a discussion about this in the Daily Gwei Discord channel today. index products within crypto, I feel like, and it's kind of like hard to get them right sometimes, especially products like this. Like, I mean, as you guys know, I'm a big fan of the index co-op. I'm involved in it indirectly through SET because I'm an advisor to SET. And I really like their products like the flexible leverage index and kind of like Metaverse Index and DPI and things like that, and all the other products. But the problem is that when you're constructing an index, you need to make sure that you don't over rebalance it. You don't have like dead weight in it. You don't have the weighting wrong. And it actually becomes quite difficult over time. Now, if the goal of the index is just to give people broad exposure to a kind of like sector, then that's fine. But I mean, I'm sure a lot of you have seen the DeFi Pulse Index, unfortunately, has like greatly underperformed ETH, since inception, basically. And, maybe that'll change over time and maybe kind of like there'll be an index that outperforms ETH over the long term. But for me, I use my benchmark asset as ETH. Maybe some of you don't use your benchmark asset as ETH, and you're happy being able to kind of like buy an index product to get exposure to all these tokens. And even if it underperforms ETH, you don't really care too much. But I mean, this is the kind of discussion that we had in the Discord channel today, and I had some people pushing back on me about it. And it just depends what position you're in. For me, I'm of the kind of like conservative mindset now, where I'm just like happy buying ETH and happy kind of like sitting in ETH. But there are a lot of people. And I totally understand that there are a lot of people who want to do more of the degen stuff, or want to get more involved and want to hold different things and want to basically make plays in smaller kind of like tokens to kind of like get those big multiples that just ETH probably won't give you. I mean, like as bullish as I am on ETH isn't going to give you 100x like anytime soon. Like 100x from here is $400,000. I mean, look, maybe that happens in like 20, 30 years or something like that, or something crazy. Maybe it happens if the USD does actually hyperinflate, which I highly doubt. But you can still get 100x from some of these newer projects, right? For example, I don't know which ones are going to do that. It's also very hard to get 100x. You not only have to buy at the right time, you have to hold for the 100x. You can't just like sell once it's done a 10x, and then look back in 6 months and say, wow, I should have held. It's done 100x, right? But like with ETH, it's not going to give you 100x anytime soon. Even a 10x from here. For ETH to get to 40K, it could happen in the next few years. But I mean, there are a lot of other things that are obviously out on the risk curve where it's much riskier to buy them. The chances of success are much lower, and the chances of wealth preservation is much lower. But if you pick the right one, you can ride it up. I mean, recently, something like Spell, if you had bought that a couple of months ago, you're up a lot on Spell. I think it's up 100x or something like that, even more than that. Same with from Olympus DAO. Same with a few of these other ones around here. I think CVX is up maybe 15x over the past couple of months. I think what else is here? MPL has been doing quite well. Disclosure: I'm an investor in MPL. That's why I know it's been doing quite well. But I mean, RGT as well was like $1 a few months ago. It's like done over 30x. So when you kind of look at it from that perspective, in that time, ETH hasn't done like a 10x or a 30x or whatever. ETH has been flat over the last 6 months, right? Technically, because 6 months ago in May, it was like at all-time high at around 4,000, 4,400. Now it's pretty much like ping-ponging between the two at kind of like time of recording. So during that time, you could have gone out on the risk curve with these kind of like smaller cap DeFi tokens, put some money into them and made a 10 to 100x. But the thing is, you're taking on a lot more risk. You're taking on not only a lot more risk, but you're also basically saying to yourself, well, I believe in this product enough to hold it for a long period of time, which I mean is probably even more difficult to do than picking the product in the first place. So the index product, something like this, just makes that easy. And I think it just makes it so you don't have to think about those sorts of things. But at the same time, index products, depending on how they're weighted, depending on I guess, when they're rebalanced, and depending on what kind of like time how long you spend in them, it's going to give you different results. But still, I mean, if you want to discuss this further with me, definitely jump into the Discord channel. There's a lot of smart people in there, and we've been discussing it over the last kind of like few hours, earlier in the day, I should say. But it's an interesting discussion because, as I said, like I'm in a very different position personally than someone else. Like I am not chasing these things anymore. Like if you kind of rewind maybe a year ago during DeFi summer, the first DeFi summer in 2020, I was doing all of this. I was chasing all the low cap things. I was degenning into things. I was degen yield farming. But personally, I don't need to do that anymore. I'm at a point where I'm happy stacking ETH. But there are plenty of people that are new to the ecosystem, and a lot of you may be in the same position here, where you realize that if you want to make a 10 to 100x return in a relatively short period of time, let's say 1 to 2 years, you're going to have to go way out on the risk curve. And there's plenty of opportunities to do that. But what I like to tell people is just like to understand the risks, because even though I did my like degenning a year ago, I still kind of like lost money on things, and I still underperformed ETH on a few things that I bought because I held it for too long. So it can definitely be something where you may be confident at the time, and then over the long term, your kind of like thesis changes, or the product doesn't go anywhere, kind of like fails to gain traction. So definitely something to think about. But again, that is not investment advice. That is just general kind of like views on the market. I'm not telling you what you should do or what you shouldn't do. But as someone who's been in both shoes of kind of like being in the degen mindset and being in the conservative mindset, I can tell you that being a degen is fun while you're riding it up. But if you do hold it for too long, it kind of like feels shitty, especially if you underperform ETH. And I've done that with a couple of things where I've held it for way too long. I've underperformed ETH, and then factoring in taxes, it gets even worse because taxes are denominated in dollars, in fiat. So even though I'm up in fiat, I'm down in ETH, and then I'm down even more in ETH because I've had to pay taxes on the fiat that I made, and then I buy back even less ETH than I was down on. So, for me, it's just like a different scenario. But I think for anyone that's just starting out, it definitely makes sense to go down the risk curve and see what you enjoy. But it also definitely makes sense to check out the index products too as something of a safer bet than just going and putting all your money into one thing, I think. All right, so Lyra Finance have announced that their Ignition token distribution has begun. So you can basically trade, stake, and provide liquidity on Lyra as options protocol to earn the Lyra token. Now, some of you remember that Lyra is on the Optimism network, so it's on layer 2. No need to spend a lot of money on gas fees to interact with Lyra, which is always awesome. You can read the full announcement post here. It'll be linked in the YouTube description. But essentially, this is this is something that happens over various rounds and phases, and essentially, it's giving people an opportunity to earn Lyra tokens and over a period of time, all on Optimism. So definitely go check this out. It'll be linked in the YouTube description. And speaking of Optimism, actually, there was another update today from them about EVM Equivalence. So I remember that I talked about how the OVM 2.0 upgrade, which is going live in a couple of weeks now, is going to introduce EVM Equivalence, where the Optimism network is literally just Ethereum running on a rollup. It's not just EVM compatible, it's EVM equivalent, which is really, really awesome. Now, this blog post goes into great detail about what this means, why EVM equivalence is actually desirable, why it's needed, why it's good for users, why it's good for developers, what the future of Ethereum looks like, all the good stuff. I mean, there's so much meat packed in here. You should definitely go check this out and read the whole blog post. Highly recommend doing so, but I'm super excited for this. I mean, between this and Arbitrum Nitro on the optimistic rollup side, there are some really, really cool upgrades coming that are not only going to reduce transaction fees, but also increase kind of like transaction speeds, which are already near instant, right? Like, I've had people say when Arbitrum was saying, we're going to do 20 to 50x faster transactions. Well, the transactions are pretty much near instant. Like, at most it's probably taking 1 or 2 seconds to come up with a transaction confirmed kind of window. So if it's 20 to 50x more faster than that, it's a sub-second kind of like transaction confirmation. And now, as I've explained before, it's a confirmation. It's not a finalization. Your transaction isn't actually finalized till it's posted as a batch on Ethereum. But still, for the end user, that's a great kind of like user experience there. So very, very exciting things happening in the optimistic rollout space. And of course, in the ZK rollout space as well, with Starknet going live next month in an alpha fashion. But the race is really on for these layer 2s. As I said before, the fact that all these layer 2s are kind of coming out at the same time and they're all kind of like in competition with each other to get apps onboarded onto there, to get users on there, they're going to be working overtime and really, really hard to get all this stuff out to market. And us as end users are going to benefit from it the most. So I'm super excited about this, and I can't wait to see this go live in a couple of weeks. But as I said, recommend checking out the blog post here. All right, and finally, there's a new feature on Optimism's gateway. You can now select Hop Exchange from the drop-down menu to make your withdrawal using Hop Protocol straight from the Optimism official gateway. This is awesome. Like, I mean, I love the bridges, right? You guys know I love bridges. I talk about bridges every bloody episode at this point. Bridges is contending with Polynya for how much I talk about them. But this is really awesome that it's natively kind of like inbuilt into the main Optimism gateway, because a lot of users will be using the native gateway, and they'll be kind of like seeing that 7-day withdrawal period and kind of like get turned off. But then if they change their bridge to something like HOP, and then HOP says to them, well, no, you can have your funds a lot faster, whatever kind of like the processing time is. It's less than 30 minutes, I think, or sometimes even instant, depending on kind of like what you're doing and kind of like how the system is running. Of course, users are going to select that, which I think is really, really awesome. But I mean, of course, you should all remember the golden rule of bridges. Not all the bridges are created equal. There are risks and trade-offs of all of them. But I think that it's just awesome that users already have this option instead of having to kind of like wait that 7 days. Like, if I'm being honest, no user... I mean, 99% of users aren't going to want to wait 7 days to withdraw their kind of like funds out to layer 1. But at the same time, there's going to be less and less users who will ever actually want to withdraw their funds to layer 1. The only reason to withdraw your funds from, I guess, like a layer 2 or from Ethereum in general is to get it to a centralized exchange. Once the centralized exchanges have bridges, you're not going to have to leave layer 2 at all. You could just go straight to the centralized exchange with your funds from the layer 2. So super, super cool to see this. And I'm really, really glad to see that HOP has been selected as well, because I like HOP. It's one of my favorite kind of bridging protocols, but I'm sure they'll be integrating others like Connext and Sala and Synapse and stuff like that as well going forward. But on that note, I think that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.